Good morning, Paul Georgie from Allendale. It's April 8th, 2011. The USDA came out with their monthly monthly supply-demand reports this morning, and of course, we've got a surprise. The corn market, which everybody was looking for a reduction in corn ending stocks because of the quarterly stocks report that we've seen here 2 weeks ago. Or 10 days ago, they kept the ending stocks the same at 675 on corn. Trade average there was 595, and soybean ending stocks remained the same as well at 140 versus a trade estimate there of 137. Wheat also was a surprise for the trade. The USDA last month was at 843. The trade was expecting an 861, an increase in ending stocks on wheat, but the USDA came out with an 839, which was a reduced number there. Now, all of this said, what it looks like the government has seen here is that we will use more wheat for feed. Lower price relationship of corn and wheat that we're seeing here on the futures is enticing more demand for wheat as feed and other uses. So will allow some of this the corn to ending stocks to not be quite as tight. So we're seeing some shifting there in the demand side of things. Some other numbers, USDA raised the Brazilian crop from 70 up to 72 million metric tons, which those are numbers that we've been hearing about from other agencies in Brazil that's saying that they're looking at a bigger crop there. The USDA gave us those numbers today at 72 million metric tons versus 70 last month. World ending stocks on corn, 122.4. That's going to be down slightly from what they had last month. And soybean ending stocks actually increased from last month at 58.3, raised that up to 60.2. So looking for markets to be lower here today. The corn, at least early calls, are 10 to 15 lower. Soybeans 10 to 15, maybe 20 lower, and wheat market, because of the pressure and the way it's been trading, calling it lower as well, just because of the pressure in the other commodities than corn and soybeans. So we're getting some weakness off of this report. However, the question will be how much belief and emphasis the traders put into this. Into these numbers. Outside markets are going to be supportive to the commodity markets, to grains especially. We've got the dollar down 44. Crude oil's up 130 right now. Gold is up about $12. Stock market is higher. So the outside markets are definitely providing support here. And after the initial shock of the government's release here this morning, we expect that we should find some support underneath this market, as we still have got tight supplies. Remember, 675 is not an abundance of corn. That still is a very tight supply. Other news, weather conditions, rain across the Corn Belt. Trade's going to be concerned about that. Are we going to get the corn planted in time, get it planted in good soil conditions that it can that we can have that 162 bushel an acre that the trend yield suggests that we need in order to keep these ending stocks the same or even raise them a little bit going into this 2011-12 crop year. The livestock trade, cattle prices were trading higher before this report. After the report, the electronic trades showing cattle prices now down 30 cents, kind of in line with the corn trade there. Cash cattle traded at 123 to 124 in the south this week, at 196 to 198 in the Nebraska area on the dress basis. Cutout values were slightly lower. We've got some effects there from the earthquake that happened in Japan yesterday. That is still having some shaken effects here on the cattle trade. Pork cutout values are lower there. The electronic trade has seen a little bit of a bounce there, 20 to 30 cents here this morning, but that market came under a lot of pressure yesterday, so would expect that we could see a lower price there in the hogs, especially in the deferred contracts, if we see some, if this grain market comes under pressure here this morning. So bottom line is look for a lower opening. We expect that there will be some profit taking. There was some buying ahead of this report, so some of that could cause a little pressure here. We would expect volatility here today as traders trying to sift through these numbers and realize that we still have tight stocks in the corn market. So we wish everybody a very successful day. If you've got any questions, give us a call here at Allendale at 800-262-7538. We'd be happy to answer those questions for you. And have a great weekend. We'll talk to you on Monday morning.